everyone, and welcome back to my Forex trading the week ahead. I'm just going to look at a couple of pairs on the daily time frame. Got the daily chart of the New Zealand dollar up here, and what's nice about this is not only being on the daily chart you get time to do the analysis yourself, but what I've actually got on here is a couple of opportunities. So if the market actually is bullish from here, pushes up and breaks structure here from where it is currently, we're actually going to have an opportunity to short, or a reversal zone, should I say. There's not actually obviously an entry opportunity. We'll have to wait till we get up into the zone, but at least we're going to have a zone mapped out so we know what we're doing to potentially sell at that point. And then if market actually breaks to the downside, or continues to the downside, should I say, then we're going to have an opportunity to get long as well with an advanced pattern down there. For those of you who knows advanced patterns, you've probably picked it out already. But let's go through it. What I've basically been looking at, we've seen that we've had the big sell-off down here. What I'm looking at really is this point here. Okay, I know we had this big spike down, big wick candle, and market got sucked back up. We came down again, put in a little double bottom down here, and then price has broken up, broken this level of structure here. So as soon as I'm seeing that, I'm thinking, okay, a potential rotation, potential bullish rotation. So we could be moving up for a bigger retracement of this leg here. So what's the next thing I want to do? I want to find out if there's any Fibonacci levels for a retracement lining up anywhere. You can use the bottom of that wick. It may vary depending what you have on your charts. This may be the low for you. It's not going to be too much in it. So if you put that there, we've got a 618 lining up there. Let's fatten that up a little bit. That's already it's okay. Okay, so we've got a 618. Now the interesting thing with the 618 is that we're lining up very close to a structure level. So we have these lows of the wicks. This is actually the structure level that we'll be looking at. Yes, everything is a zone, so it is good to mark out of a zone, but for now we'll just leave it with that structure point. Okay, so is there anything else? We've got a 618 sat slightly below. What else have we got? What else can I do? Okay, I'm going to grab my Fibonacci extension tool. I'm going to take the most recent impulse leg that broke structure to the high side, swing high to swing low. Got a 127 there, so I'm suspecting that I've got a 141 a little bit higher. I'm probably going to have a 141 pretty much around that zone. I'm going to have a 161. What am I doing? Where's the 1618 gone? There. A little bit higher. So he's too high, but we've got a 141. Now something else that I always do is I like to take Fibonacci inversion of the last move there. So got the 141 coming a bit lower there. So what we're probably going to have is a 1618 lining up there. See if we get that. Yes, we do. Let me move over so we can see it. Let's move that over there. Right, so we've got the 141 and the 1618 lining up perfectly together pretty much. And obviously you can see now why I've said it's a zone. They're not exactly bang on line with each other, but they don't need to be because it's a zone. It's a zone that we're looking for. So the fact that we've got that Fibonacci cluster at structure is very, very powerful. I know price hasn't come up to that level yet, but that's what we're looking for. If price comes up to there, then we look for an entry technique to get short. So if I just scroll out, is there any other structure along that level to make it an even stronger level, more powerful level as a major structure? I actually marked those out when I was doing some analysis earlier on. And you can see that if I come a little bit, yeah, a level there, a level there. Okay, it's a bit messy here, breaks and closes above, but you can see the stall points around. Again, it's a zone, it's a level. So if we go back out again, we're safe to say that's a strong level of structure. So obviously structure came down, support, bounce, support, moved up, we broke through it, we immediately came back up, became resistance, we broke down, and we're looking now for the second test at that level to get short. So if price moves from here and instantly rallies, breaks this level and makes its way up here, then we'll be looking for an entry technique to get short. So we've got that mapped out. We know what we're doing if the market goes long. Okay, so what are we doing if the market continues on its downward move? Well, as I mentioned before, I'm not going to put all the Fibonacci's in, but we've got a bullish Gartley pattern here. I'll just move that over so we can see it. Take off that 1618 because that's not what we need. We need the 127. So there's the 127 coming down there, slightly below 63 even handle. Those even handles are the strong levels. The market's drawn to those. So let's get a triangle tool. Let's mark it out. We've got an X to A to B. B to C, and C to D will be completing down there. If the market continues downwards, we've got an entry down at the D leg of the 127 Fibonacci extension level. Gives us our D completion for the market, taking two targets for the markets to bounce back up. Looking for our Fibonacci levels of, we're looking for our Fibonacci retracement from the A leg down to the D completion point. And we want target 1s at the 38.2, and we're looking at target 2s at the 61.8. Okay, so that's the New Zealand dollar daily chart. You've got plenty of time to analyze it for yourself, plenty of time to make some trading decisions that are in your plan. Just a couple of ideas. We'll see what the market does. It may just bounce around here for a while. We may shoot straight down. We may shoot straight up. Who knows? But at least we've got a plan. If the market shoots up, we know what we're doing. If the market goes short, we know what we're doing. Okay, so let's move over to the euro dollar. Okay, so here we are on the euro dollar daily chart again. Zoomed out a little bit, so we had the big move down, put in a little bit of consolidation, a little breakdown, and then we're consolidating again. So what I'm going to do here is just use something. I don't actually use parallel channel tools. I sometimes put trend lines on just to add some confluence to a potential trade idea. I don't use them, but it's just interesting. It's a good thing to know about as many tools as you can, just because it builds and adds to a case and builds a confluent area and potentially giving you the higher probability reversal zone. And so, like I said, I don't tend to use this, so I'm not saying that I'm using it in the right way whatsoever, but as my understanding of how to use it, I've just got this channel here. So you notice you have that channel. It's quite easy to spot. Little break, a false breakout there, then we move back in, tested, 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 tested. You get the idea. We broke out of there and we moved up, and then we're sat there. Okay, so now we move into the actual trading technique and strategy pattern that I use. So we're going to need our Fibonacci tool. It's just a short video, so I'm not going to go through each Fibonacci level, but what we have is an 88.6 Fibonacci retracement level, and that gives us a back pattern completion. Like I say, I'm not going to go through the criteria for the back pattern. You're just going to have to trust me that that's how it's traded, that the Fibonacci's are met to validate the Gartley pattern. Okay, this doesn't mean that price is going to move. If price breaks this level and continues to complete the Gartley pattern, it doesn't mean that it's going to complete it there, which looks nice with the trend line. However, as the pattern has formed, it just happens to be an area at a point of a retest of the trend line. Like I say, I don't use the trend line, don't pay too much attention to it. More importantly, is the pattern. I would take it regardless whether the trend line was there. Again, Fibonacci target levels of the 38.2 and the 618, not the 78.6 that's down there. You can shoot for that if you like, but I don't. What's going on here? There we go. 88.6, and we want 38.2. There you are. 618. There you are. Want those two targets. Pull that across so it's a bit clearer to see. So we're looking for price to move up, break this level, get our entries in here, stops above the X leg, and we're looking for a target 1 and a target 2. Alright guys, I hope you enjoyed the week ahead video. Short, give you a couple of ideas, a few ideas of potential trade setups. Take your time, analyze it yourself, see what you think, and I hope you liked it. If it was useful to you, if it was valuable, share it, give it a like. I'll see you on the next video.